I'm a mechanical trader. I've been trading mechanical for a year. I have a data-backed model, 4 years worth of data. It's profitable. It's profitable in live trading. I've been doing this for a long time. My model only takes me 20 minutes a day to trade, maybe 30 at most. It only happens in New York time from 3 p.m. UK time to 4:45 p.m. UK time. It doesn't take me a lot of time. It's boring, it's consistent, and it's very robot-like. Okay. Now, I was talking to my Discord and I was saying I miss discretionary trading. I miss subjective trading. I have a lot of spare time and I don't know really what to do. So, what I said I was going to do was I'm going to show you, I'm going to create a new model from scratch, from the absolute basic foundations to having a theory on what I'm looking for. I'm going to choose whether it's a scalping, swing trading, intraday, day trading strategy. And then I'm going to lay the foundations, make basic rules, refine things, collect data, more refinements, live trade it, more refinements, and I'm going to show you the whole process of basically how I made my own model. First of all, if you're looking to create your own model, there are a few things you need to think about. Now, it doesn't really matter what you've learned because this is universal. This is completely universal because this could be an ICT model. This could be a supply and demand. This can be indicator-based strategy. It could be a mechanical one. It could be very discretionary. And what I mean by discretionary, so for example, you could say, oh, I think price is going to go up. I like this level. I just want to get in. And you can still build a model around that. There are many things you can do, basic price action. Okay, so what I'm going to be doing is, first of all, I need to set my goals. So I want to be, obviously, my trading day is filled from 3 p.m. till 4 p.m. Well, let's say 5 p.m. Okay, so I can't trade during that time. I don't want to fill up my whole day because obviously the point of this is to have a lot of freedom and not spend a lot of time. So I want this to be a London strategy, right? So that's my first goal. I want to be entering between 7 in the morning till maybe 10 in the morning, right? So that gives me this window. And this is something that you might think about, whether, okay, if I work a 9 to 5 and I can't get on the charts, then I'm probably going to avoid trading between 9 till 5. Maybe I'll try trade before 9. Maybe I'll trade after 5. Or I'll look at a swing trading strategy where I have my alerts. You set your alerts, you go about your day. Okay. So this is the times I want to enter. Now, I'm going to be, so that's my first protocol. London, I want to be 7 till 10 a.m. entry. And I'm just going off the cuff. I'm just putting ideas together. This might change. I don't want it to change, but this is my first theory of what I'm going to be doing. So 7 till 10 a.m. I'm going to be looking at price action. I'm going to be looking at things like previous days high, previous days low, previous weeks low, previous session low. I want to be trading. Now, my first idea really was I want to have a swing strategy. Okay, so for example, trading from previous week's high to previous week's low. Those, for me, things I've learned over the years is those levels are very strong. They cause reversals. With the right confirmation, you can find a way to target the other side. So what I'm going to be looking at is Asian range. And now the first thing I need to determine is what is my Asian range, because creating a model and saying, oh, I'm going to be targeting from Asian range low liquidity sweep to Asian range high, and I'm going to look for a microstructure shift order block. That's not a model. That is a very vague idea of what you're going to do. That could be your goal. So that could be my goal, is from going from high and entry and then taking out low. That's always going to be my target, and that's going to be my first confirmation. This is my entry model. I'll have a break-even point rule, and then my target will always be fixed of the other side of the range. So that is that. Okay, now I wanted to be doing this in line with the daily bias. Now, daily bias is an interesting concept because there are many ways to determine your daily bias. I'm sure you probably watched a lot of those videos, and a lot of them have some sort of science behind it. So I want this to be a mechanical daily bias. I don't want to have a lot of discretion in with my daily bias. Now, daily bias can be discretionary, but for this one, I want to keep this. I still want to keep this model mechanical because I know the benefits of mechanical. It reduces the emotions and it keeps you less likely to tilt. So that's what I'm going to be trying to do, keep it mechanical for the daily bias. So we're going to have to work out how I'm going to make the mechanical daily bias, because you need to have very concrete rules and rules that can't be disputed in order to figure that out. What am I going to be trading? What instruments am I going to be trading? That's the first thing. You know, I trade on my other model, I trade 28 Forex pairs. I don't want to be trading all 28 because what I've noticed from experience is spreads. On some pairs, for example, AUD, NZD, the spreads are poor, right? So I don't want to be trading 28 pairs. I do like the idea of trading German 30. I want to be trading that. I've seen it. I've been watching it from the sidelines for a while. I think I like the look of the way it moves. It usually is quite a volume pair. So German 30. I want to be trading Euro USD, GBP USD, AUD USD, NZD USD. I want to be trading also Euro JPY and British Pound JPY. So that's 1, 2, 3, 4, 5, 6, 7. There's no really any science to why. This is just my theory. I'm just, those are the pairs I want to be using, right? They've got good spreads, they move well, and I believe I can create a strategy around them. So that is my first thing I'm looking at. So I've got my basic goals, okay? Obviously you can't look at return goals yet. You know, you can't decide that yet. But first, we have goals. We've established our goals. Second of all, we need to look at some theory. So what I will do in the next episode is I will go onto the chart and completely look at hindsight. I'll look at completely hindsight stuff. So I'll see where can I fit my model. I'll play around with time frames because I need, obviously, my Asian range is determined. So my Asian range, I'm going to be simply looking at an indicator. Now, Asian range time doesn't matter, as I said before. I think what I'm going to do is, as long as you keep it accurate, you know, whatever this Asian range indicator time is, which is 1900 to 1, that is my Asian range time. So that's my first concrete rule. I want to sweep this range, I want to sweep high to the low, right? So that's that figured out. Now, daily bias. Again, this is a good daily bias. T-Trade's daily bias is what I will be looking at for my criteria for daily bias. So if we close above previous day's high, my next day bias will be bullish. If we fail to close, next day will be previous day's low, and so on and so forth. If we don't sweep both sides, there's no bias. Again, if we sweep both sides, no bias. Very simple, right? But this indicator has a set of rules. So we've got weekly bias and we've got a week showing there. So I only want to be looking at just, you know, when I'm on the 4-hour chart, I only want to be looking at the top. So if my daily bias is bearish, on this day, I want a sweep of Asian high, then targeting Asian low here. So that's very simple, right? So that's figured out. Daily bias is done. I then will look on to see if I can look at some confirmation. So first I need a confirmation or a reversal. Which time frame am I looking for a confirmation or reversal? For QCS, you know, if I see that a 4-hour high has been swept, I see if the 1 hour is closed as a sweep of that. So we could potentially do something around that. Maybe go a lower time frame. But again, we need to keep it constant so it's something that we can be consistent with and gather reliable data for. Then I'll look at entry model. Now I usually look for a 1 minute. Sorry, I look up for a 5-minute entry model. Maybe I'll look at a 15-minute or even a 1 minute for potentially higher RR, lower win rate, right? So that's that. Then we will look at data collection. So we will look at 2025 data. I will go on FX Replay. I'll backtest my strategy. I'll gather all my data. I'll collect all of the variables that I possibly could have an impact on this strategy. We could look at other confluences, you know. A confirmation of a reversal. Is there a key level involved? Is there order block? Is there a market structure shift? Are we in a trend? Things like that. And then I'll collect my data on it, collect all the variables. Once I've collected 2025, I'll look at refinements. You know, if I've collected 2025 and realize, well, this is not very profitable, then I'll look at maybe changing something and redo the testing again with different variables and collect those. If I notice there's a pattern in collecting the variables that are showing up in winners, or we can remove certain confluences and increase the win rate, or we can reduce the losses by adding a confluence, adding an extra confirmation, and we'll look to do that. If we're satisfied with 2025 results, then we'll collect 2024, because 2025 data, I've seen models where they worked in 2025, but they haven't worked in the previous years, like the completely mechanical year that I'm creating. So yeah, that will do, and then we'll refine, then we'll start live trading, and this will all be documented. I'll show you the process. I'll show you how I collect the data. I'll show you my Notion, how I've made sure what refinements I've done. I'll do some analysis. I'll make some graphs. And next episode, we'll go into the theory. We'll actually look at some charts and just have a few ideas. I'll just have a little time lapse of me going through 30 minutes of price action, and I'll go, you know, this looks good. I've caught a few trades here. Not in a sort of backtesting manner, but just essentially I'll basically look at winning trades and see if there's a pattern in what I'm seeing. So yeah, see you in the next episode.